Hey, what's up everyone? Welcome back to another technical analysis update for Bitcoin. This video is going to be a long one as I think there's a lot to cover, and since Bitcoin is starting to breach some very important support levels here on the local timeframes, I think it's a good time to start talking about where Bitcoin might be headed to. I'm going to do my best to make sure this is organized as best as possible and coherent as possible so that everything I say in my thesis makes sense in all respective timeframes, and that means that I will try to reduce as many market inefficiencies from an Elliott Wave Theory perspective, which is what I specialize in, but also make sure that it aligns with some of the basic technical indicators that many of you are probably familiar with, like momentum indicators like the RSI and so forth. And then there's also the market psychology aspect. I'll do my best to also intertwine with that for both the local and higher timeframes. So that being said, please make sure to hit that like button, subscribe to the channel if you haven't already. You guys already know the drill if you would like to see more of these videos. So I think the very first thing that we need to do here is start with a very clean slate, meaning start with as much data as possible on the highest of time frames. And here we can see the weekly time frame. It looks immensely bullish when we see it in this perspective. There's no kind of denying that. And so if we start with the weekly time frame, I don't think it's really even relevant to talk about the more deeper theories like the Elliott Wave Theory. Instead, I think it's important, like I said, to kind of get a rough gauge of where we stand with the most simple indicators. And the ones that have been the most reliable for not only me, but for the general markets have always been the simple moving averages. We're not even talking about exponential moving averages, which is a little bit more complicated. And I say this because it's just the responsiveness factor of how the markets have reacted to each one. And the 200-day simple moving average has always been and widely considered one of the most significant indicators for identifying long-term market support and resistances for literally every time frame in that regard as well. And you'll see why when we start to actually zoom in. But it acts as a crucial line in the sand for many investors and analysts, even those that don't do TA. So it's important to use that because it ties heavily into the market psychology of all market participants because of its widespread adoption and a self-fulfilling prophecy essentially. And ignoring it and complicate it with other SMA or simple moving average values, it would be too much. So the 200 one is the best. So you can see the responsiveness of the 200 simple moving average is still giving us very crucial signals that Bitcoin is still within a super bull run. Basically, this is why basically everyone and anyone knows about Bitcoin at this point. And since we are still above, actually well above the 200 moving average as we speak with the current time, there's really nothing to worry about in my opinion, even with the black swan event to occur. The $54,000 levels, if we just got a straight nuke to the downside, we would still at least get some kind of reaction off of those levels. Now we want to up the ante here a bit and kind of upgrade it further with other indicators to kind of understand what the trend is doing right now. And one of them could be using momentum indicators like even the RSI, but even that starts to become a little bit unreliable on the larger time frames like we have here. So I think just sticking to the simple moving average would be the best and most reliable, accurate way of looking at it here on the larger time frames. But we do have some interesting observations that could be made when it ties into the actual psychology of where we currently stand, because the RSI is starting to go back into the oversold territory, which is interesting. The oscillator or the line has actually broken a yearly support level, as you can see here in the neutral zone. So this could be telling us a story that we may not be prepared for just yet, but it's still a little bit too early to talk about, especially here on the larger time frames. I would say the RSI is a little bit more accurate when you're looking on the daily and the lower time frames, since it does have a fixed kind of value and calculated value. But how can we be prepared just in the case the RSI were to go into the oversold territories? How can we prepare for this? Well, there's a few ways. We can look at it from what I specialize in. We can create these scenarios using the Elliott Wave Theory, which utilizes what is known as the fives, the 5-way move, and a 3-way move, the 5s and the 3s. It's basically a form of TA that predicts, the market movements using recurring fractal patterns, and those are known as the 5s and 3s, the waves basically. And basically, it's just a 5-wave move to the upside in the general direction, which is in a bull market, of course, and then it follows by a 3-wave correction. And you can see we have 5 waves up, 3 waves down, 5-wave up, 3-wave down, 5-wave up, 3-wave down, and so forth. That is how we kind of predict the markets. And this is what creates basically one complete cycle over and over. The complicated part of the theory is that the waves can be broken down into basically smaller versions, like I just showed you, of the same pattern on different time scales. But the most important thing is that it's quite reliable on the larger time frames. It works best when you have a lot of data. And just a few months ago, I mentioned that even the RSI is a bit hard to identify where the price will go. But since the Elliott Wave Theory gives us clear indications based on a set of rules and guidelines of where a cycle may complete, it works on all time frames pretty well within reason. So we can create these scenarios, and if you are able to, or if you're versed in the wave theory, you can narrow down these scenarios with higher probabilities and kind of understand with the tied in market psychology between all of these waves. And then you can start even, kind of stacking these indicators like these 200 simple moving averages to help kind of build that theory. Like I said, if you have a 200 simple moving average, you're working within a bull cycle, so you want to probably stick with a more bullish scenario if you're able to kind of narrow down it with using the Elliott Wave Theory. So as you see here, this is one of those scenarios. Again, 5s and 3s. I'm not going to overcomplicate it, but I've pretty much done all the hard work for everyone. But you can see this is how I would currently count it using the halving cycle theory, basically, because it does help kind of narrow down and break down each of the cycles that we had. It's pretty much the only way to view Bitcoin at this point, and everyone knows about the halving cycles and what the anticipation that they bring. Usually what follows it is a super bull run after each of these cycles, but as you can see, the cycle was quite abruptly short if you're looking at it from the post fourth halving cycle that we had back in 2024. In fact, we were ahead of schedule. We went for a wave 3 to the upside. That was a lot faster than we anticipated, because what's very interesting, again, using those fractal type approaches, Elliott Wave Theory is also based on fractals as well. And one of the observations that we can make is that these wave 3s usually happened after the cycle halving, but right now we don't have that. We actually had that wave 3 occur earlier, and this is why I have built this theory, if you guys have been watching my previous past videos, that an extended 5th wave cycle was most likely in play, because a lot of people are expecting the cycle theory where retail is now more or less more interested and more participating in the current cycle than they were in the past cycles. That everyone that missed out on this wave 3, now that they're a believer of the current bull cycle, not only to the time will be extended, but 5th wave extension is also coming into play. And again, I don't want to complicate it too much, but a 5th wave extension is just basically when everyone misses out on a wave 3, and then everyone kind of FOMOs back into a wave 5. And that's kind of what we have been trying to theorize for the past few months, and I would say even up to a year at this point. So that is an interesting way of looking at it. But again, the local time frames, as we are now starting to breach some of the very important support levels from a bullish perspective, we do have to kind of create some other scenarios. And a few other scenarios that I have been looking at is to kind of look at it from this perspective, which is, again, it's pretty much the same idea. It's just a little bit different in terms of the regards of how each nested cycle has played out. Basically, we have the first cycle here, the super cycle, and then the primary. As you can see, these are all just nomenclatures of how each cycle plays out between the 5s and the 3s. Like I said, a 5-wave structure is followed by a 3-wave, 5-wave, 3-wave, 5-wave, 3-wave, and so forth. And in this case, we could just say that, from a timing perspective, it is matching quite well with a pullback if you're looking at it from the traditional 4-year type of approach, right? And you can see with every 4-year approach, Bitcoin has gone into a bear market, basically, right? Now, I'm not saying we're going to go straight into a bear market using this idea. I'm just saying that it's a little bit different. We have to kind of experiment with the different shifts of the psychology that's happening, because every new cycle is going to be introduced with new investors, and those new investors become either smarter or dumber. And in this case, I think the markets are becoming a lot smarter. I think a a lot more people are interested in using technical analysis. So it becomes a far more easier way to expect and predict when you're using these simple types of approaches using the simple technical indicators, like I said. So that 200 moving average definitely will be acting as support in my opinion, and most definitely if we do get to those levels, it would be definitely a very strong buying opportunity. So if we, in the case that we start to do another pullback, this scenario is kind of suggesting that if we do kind of magnet towards that 200 moving average, using the Elliott Wave Theory, since we do have what could be a completed 5-wave cycle move to the upside, and we now have a wave 1 at the top. Remember, 5-wave moves usually lead us into a higher degree of wave 1, and that's what we're doing here. That's why it's called nesting here. It's just one of those terms that I like to use. And then, using any type of pattern recognitions, again, every corrective pattern does have its own pattern recognition, and there's a lot of set rules and guidelines. There could be a triangle pattern, there could be a flat pattern, and a zigzag is more of the traditional approach that we had in the past bear market cycles, where it's a 3-wave structure. And you can see we have a 3-wave structure here, 3-wave structure here, and that is what's known as a zigzag. And those zigzags also turn into more complex zigzags. But in this case, if we're kind of using the mixed bag approach where this cycle is a little bit different, and we can use it within reason and a balanced approach without going overly biased into a bullish or bearish thesis, I think the flat idea probably fits this idea as best as we can, especially if we have that 200 simple moving average within mind. And right now, as you can see, we have a traditional wave A to the downside, a B wave to the upside, and then a C wave that follows, which helps kind of eliminate and create an equilibrium zone. Basically, a distribution zone is what we like to call it from an Elliott Wave Theory perspective, that this move here is just an entire range. Now, we can have wild volatility to the downside, wild volatility to the upside, and then a wild volatility to the downside, and that's what creates a distributive range. And these flats also come in different variations, and in this case, it would be known as an expanded flat, where you have a fixed, pretty much a fixed value range, and then you would have a 3-way move down, a 3-way move up, which would breach the previous high, and a lot of fake outs would happen here. In that case, the market psychology does prove true to that. We did have a fake out here, and then now we're kind of in this zone right here, kind of trying to fulfill, or at least trying to prove that this is going to be a flat and we're going to continue down to kind of retest this entire range, and then we would move up. And that's what happens here. That 200 simple moving average will act as support for the C wave, and then we'd move up for a wave 3, 4, 5 to complete off this intermediate cycle for this 5-wave structure, and then a 3, 4, 5 to follow suit. And then we're kind of nesting this entire structure as we're basically working in a series of 1-2s. We're now working in each of its respective wave 3s of the type of cycles that we're in. So it is getting a little bit more complicated here, but just to kind of note here, very simply put, I would just know that the 200 moving average is a very important support level, and it will act as support, in my opinion, with almost 90% probability at this current stage of the market, right? So there's no denying that. And this is why the macro is so important, and why we can further have higher conviction that the markets are still in a super bullish cycle, including all the altcoins. So this is why I think that even if we're in a larger pullback scenario, I don't think that we will be breaching these levels, if very briefly, and then move back up, and that would be a buying opportunity. And I would say that is even up to a point, financial advice, as that has happened in every single cycle. So that's one scenario. And then we do have another scenario, which I don't want to complicate, but we do have an alternative approach for using the Elliott Wave Theory. Again, this is going to get more complicated, but for those that are interested in the Elliott Wave Theory, we do have what is known as an ending diagonal possibility, where instead of seeing this entire, split view of seeing it from a halving cycle approach, we can see it from what could be known as an ending diagonal scenario, where now the markets that are smarter, there's going to be far more volatility happening within the markets, and we can find certain ways and patterns to kind of recognize that it is possible to have those wild volatilities using this pattern. So one way is, instead of seeing it in split between 5s and 3s, we just see this entire cycle as just one 5-wave move to the upside. So we have what is known as a wave 1 here, a wave 2 here, a 3 here, and then a wave 4 as a triangle. Remember, I said that each corrective pattern can be seen as either a flat, a triangle, or an equilibrium flat type of variation. And in this case, it would be a wave 4 triangle. And then this entire move for a 5th wave, now a 5th wave or even a wave 1 could be split into two different types of 5-wave type structures. Of a motive wave is basically what it's called. A normal 5-wave impulse, this, what you've seen so far in this video is known as an impulse, but in this case, this 5-wave move is going to be split where there's indecision in the markets as diagonal, basically, and you would have wild volatilities happening in between each of the substructures, and that's what creates that 5-wave move, and that could help fulfill that rules and guideline for that 5th wave of a 5th wave. So you see how this is all stacking up. It's getting a little bit more complicated, but just trust the process is what I'm trying to say here. As an Elliottician, I'm trying to give it, as a certified Elliottician, that is, I am certified using this theory, so it is very important for me to make sure that everything is aligned properly when it comes to the rules and guidelines and making sure that I know what I say. But this is one possibility that I think a lot of people are not seeing, and when we're tying it for basic, simple technical indicators and the market psychology, again, this 200 moving average is going to be acting as support, so we know that's the base root of us having, an overall view of the markets. This wave 4 of this diagonal of this wave 1, 2, 3 up to this point still would cross into the territory of wave 1, probably just barely, and then we would have another move to the upside before we go for a larger extended bear market cycle. So that's one way of looking at it. This would mean that the markets have matured quite a bit, actually heavily. We wouldn't even see it from a traditional 4-year cycled approach anymore. So this is why this is important as an Elliottician to organize these scenarios as best as we can. Now, from an overall perspective, this does look nice. I think a lot of people don't believe that we could reach a $4,000 or $5,000 Bitcoin, but it absolutely can. And this is why that scenario using the traditional 5s and 3s, this idea does come into play quite nicely. Now, we do have problems here on the local timeframes, but that's something that, maybe I'll go into deeper on the local timeframes for the next video update. Again, hit that like button, subscribe to the channel if you haven't already. It's very important for me to make sure that you guys are interested in. If you're already halfway here, thank you very much. But yeah, hit that like button, subscribe to the channel if you're interested in seeing more of the local timeframes. I'll do that as fast as I can. But as you can see here, it's basically the same thing. You can see both scenarios do still, lead us to more upside, right? One is just showing us that traditional impulse scenario, which is going to be far more impulsive, hence the word impulsive, to the upside. But again, even with the most bearish scenario, we still do have an exit opportunity around 160,000. And if it does overshoot the diagonal, which is possible, it could go even to the $200,000, $300,000, $400,000 K regions. So that is one thing to keep in mind. Both scenarios, even with the most bearish scenario, we do have this area of region around $50,000 to be acting as major support. That still leads us to the upside with even an exit conviction or exit strategy for even the most very, very conservative scenario, which is this scenario here. So those two scenarios definitely keep in mind. Now, what is the most bullish scenario that we can kind of get out of this? Now, I know a lot of you are interested in that because we are in a cycle. Very interestingly, I've been actually kind of advocating what could be working in an extended 5th wave cycle, right? Which is where a lot of people miss out on this wave 3, and now everyone is now kind of anticipating on entering on this wave 5. Now, if you've been following me on social media, I've been talking about this local time frame structure quite extensively, but we did talk about the potential of this being a flat idea. So now this is the time where we have to zooming in to kind of go back and forth between to whether it's possible to even for this larger time frame idea to play out or not. And this is one of those times where, it is starting to become a less probable. And, this idea has been the most probable scenario going forward since we've been just impulsing straight up ever since the bear market of 2015 or 2022 rather, at $15,000. So this is why we need to prepare for the worst, but hope for the best. And right now, I think a lot of people are hoping for the best, including me, that we are still, kind of maybe in some major support levels that we're going to be moving up. But this is one of those times where we have to start kind of going back to the basics and looking at it from a larger time frame. But right now, there are two scenarios that do show us a little bit further downside, down to the $50,000 levels before we actually start moving up. But how can we theorize that we're actually gonna not go retest these levels and we're just working in an extended cycle where we're gonna be working for higher levels first before we go for a larger pullback? Well, that's when we have to zoom in, and that's why I do have a lot of scenarios for this. And right now, one of the scenarios that I have been looking at was where are we at? A scenario where basically we kind of have to dissect this last section of the move, basically, right? So if we have a 5-wave structure up, now in the original scenario, we talked about ending the 5-wave move over here. And we're now working in what is now a nested wave 1, 2 as the higher degree, where we're now going to be retesting these levels, right? So if that's the case, we have to kind of now dissect on actually creating the actual pattern on how this is going to be playing out. And I did my best to kind of count it. And the only way I can count this right now is this way. So if we actually look at it, the components that are actually make up the actual flat idea has to be divided as a 3-3-5 structure. And right now, this is the only way I can do it. Now we have two problems here. We have the inefficiency of this being a long wave A, a short wave C, and then we have the second inefficiency of this being a long wave W, and then we have a short wave Y. So when you have two market inefficiencies in a row, does the bearish scenario still stand? It can, but it's lower in the probability. But when the larger time frames are actually starting to show that this is a possibility, we might actually have to accept the actual market inefficiency of this being a possible scenario. And the reason why is because we are starting to lose some support here. If we're, depending on where you have your wave 1 pivot, the 61.8% is starting to lose the support. Now, I'm not saying it's, going to be broken entirely. We do still have some other support levels like the 78.6 and the 88.6% level that still needs to be confirmed, because we can still technically bounce out of here. We can still even say that this is a running flat of some sort. Which is another variation of a flat where we don't come down and retest the entire level of this bottom region. Instead, it creates a fake out and then it moves out, and that would be the running flat idea. In this case, what we have here, we're just assuming the worst scenario, which is the expanded flat idea, which comes down and retests this level. And not only that, it breaks it, and then we move up. So that would be that. But right now, it is starting to become a little bit more impulsive in nature. Remember, I talked about the general direction of each respective time frame, that 5s and 3s are very important and it's easy to identify. And in this case, when you have a 5-wave move up, in this case, since we're working to the downside, the trend is to the downside for at least a C wave, it's looking impulsive. It's looking more resemblance of a characteristic 5-wave structure being nested now. We have a wave 1, 2, and you can see the strength of the nature of these moves is very telling in its story on whether it's actually a corrective move, which is more controlled. Instead of this being a 3-wave structure, it would be turning into an impulsive structure where we can't actually have a 3-wave structure here, and it would now start to resemble a 5-wave structure to the downside. So that would be the best way to put it, especially if we start to breach this $90,000 level. That's something to keep in mind. I'm not sure if that's going to happen, but it's very, very possible. But we want 3 to 4 days of actual continuation of seeing this range and then move up if we're going to be supported here. But for now, in the time being, I can't really see a bullish scenario going forward, because we talked about the possibility of this even being a leading diagonal going into wave 1. And this is where the tricky part comes in, because you want to, kind of dissect it and kind of split up the waves and distribution zones as best as you can. And we actually had this as a wave 1, 2, and we had all the opportunity from the bulls to kind of coordinate and secure these levels as best as we can, but we've been failing for every single moment, basically, and that's what led to these stronger drawdown moves. And in fact, it's actually drawing down right now as we speak, and on the daily, it's even actually broken and breached it. Again, the continuing to kind of relying on a false hope, it's not a good idea. And that's why if we use the replay function, this would have been the best time to actually move up for a wave 1-2 of some sort. So that's that. Since we don't have that, again, I'm not saying it's impossible. We do have basically this major support level. The only real way I would say this to actually get supported from a bullish perspective is possibly seeing this as a possible triangle where we have a wave W or even a wave A, a wave B, and then a C wave, which is going to conclude around even a lower Fibonacci level, which should be the 78.6% level. This level right here, we're going to have a 1, 2, 3, 4, 5. Again, 5-wave move into a wave C. That 78.6% level would act as support. But when you zoom out, this doesn't really resemble a wave 1-2 of some sort. So that's why it's very important to also understand the timing perspective and also the right look, quote unquote. The right look is very important for these structures, and usually often these obscure structures usually will transform into something different, especially in hindsight. So again, this is kind of relying on false hope more than anything else. That's why the bearish scenario actually does have a little bit higher probability where we actually might start moving down and retesting and actually attacking these lower levels. So again, right now we're kind of in the middle zone right now, trying to going back and forth between the bullish and bearish scenario, just based on the evident fact that we do have some Fibonacci support levels at these levels here. So again, as you can see, with everything in organization, with all these factors in mind and using the Elliott Wave Theory to our advantage and using that 200 simple moving average, you can see even on the daily time frame, the 200 moving average, we are distributing below it. And if we're using this entire trend for this current cycle, we did trade below the 200 moving average a little bit, quite extensively actually. And this is one of those times where we're actually kind of diverting away from the 200 moving average by quite a bit with sustained pressure and in time as well. Usually if we do break down, we usually come back and retest that support. But if this starts to shift to the downside, you know, this is where it's going to start to get trickier. But that being said, I don't see a major bearish scenario. I think the best way to summarize this is that look at it from the large time frames. I think the 200 moving average on the weekly time frame is still showing some incredible support around the $50,000 to the $60,000 levels, which helps convey or give us conviction that this idea is working in a flat idea, and then we move up, or we get faked out and use this range as a running flat idea where we just go like this and then move up, or the worst case scenario, we move even further down and then it'll be working in that diagonal scenario that I mentioned, or it's really the bullish scenario at this point, right, where we're going to have to hope based on the wrong look that this is a wave 1-2 and this is turning into a wave A, B, and then this would be a triangle and then a C wave to follow suit, and that would be the end of all things and we would start to move up. But that's for your decision to be made. I think up to this point, I've given pretty much as much data as possible on whether this is going to be a continuation. It's more in the neutral zone than anything else, but hopefully that was helpful. And remember, stick to the weekly time frames, because if you look on the weekly time frame, you can see we're kind of in the crossroad between the daily and the weekly time frame, where the 200 moving average has been broken on the daily time frame, but is still well above intact on the weekly time frame. So it might be well going into a chop zone or of some sort, right, before we actually move up. But if I had to choose one, I think that the flat idea is starting to become a little bit more prevalent as we do creep up on the 200 moving average, and that'll act as support to help fulfill that this is going to be an equilibrium flat, and then we move up, and that'll help alleviate a lot of the problems and market inefficiency that we have on the larger time frames for the Elliott wave counts. But other than that, it's something that, you know, many of you might not want to believe, but it's absolutely understandable, and I don't want to believe it either, but it is a case. But other than that, if we do get supported, just know that there is a possibility of this being a wave 1-2, and then we move up and just follow the original primary scenario that we have been talking about in anticipation, because nothing is valid until it actually breaks the $71,000 low. So it is getting complicated. So that is something that for you guys to make a decision on. So hopefully that was helpful. Thank you very much. I will see you guys in the next video. Have a fantastic rest of the week. And remember to hit that like button, subscribe to the channel. We are also having a major Black Friday discount for the Discord membership. So if you're interested in joining the Discord memberships, where I do far more periodic updates, there's a way to join that as well for a very strong discount. Please use any of the links in the description below. Don't hesitate to reach out to me. And we also do offer a Patreon for the monthly memberships, which is a little bit far less content, but a way to kind of dive into what I offer as a service. Hopefully that was helpful. Thank you very much. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.